Hi, and welcome to Stock Trading Ninja Part 7, Scanning the Markets. This is your instructor, Frank Bunn. In this installment, we're going to be covering some very important information regarding the tools I've developed to increase system efficacy and maximize your potential, and save valuable time and energy as well. First, we're going to discuss the e-signal formula scripts, otherwise known as EFS scripts for short. You've been seeing the output for these in the chart examples throughout the training so far. We'll learn about the basic trigger scripts which produce the paint bar signals and how to use them. This will be very important to eliminate much of the time and energy spent locating the universal triggers. They'll also help tremendously with setup risk analysis. I've even used EFS scripts to assist with automated trade management. These tools are vital and make the best use of state-of-the-art charting and analysis software commercially available today. And they will enable you to scan large numbers of securities very quickly and improve your ability to build large samples and create the turnover necessary to succeed in the trading business. The objective here primarily is to reduce analytical burden as well as increase sample size. Let's take a look at what I'm talking about here. The EFS scripts are programmed for a variety of indicator systems that involve the universal trigger, and they are more specifically programmed to generate a colored bar, either green for long or red for shorts, on the interval which immediately follows the swing high-low pattern. So in this example, we see a potential trade in dynamic materials based on the MACD zero-line crossover system. The swing high interval is noted by the familiar SH, after which the pattern forms. The script is designed to alert you immediately to the universal trigger evolution and allow maximum flexibility for the ensuing pattern to evolve as you analyze risk and decide if you wish to enter the trade, and walk down stops if necessary after a commitment is made to trade the setup. The usefulness of the scripts cannot be overstated. It puts you in the game exactly at the right time and allows for the greatest variety of random outcomes. Here is a short setup candidate using the MACD signal line system. Again, notice how the evolution of the red bar alerts you to the potential setup. Here is still another short example. So you should be starting to see that the EFS scripts are really nothing more than handy universal trigger alerts. And pattern recognition and trade selection is up to you. And that's why it works, because it isn't mechanical. It allows the trader the option of flexibility and choice. Here's yet another example in Boeing common stock. This setup randomly enabled me to take just 1% in risk on the trade. That is the type of low-risk setup you want to be targeting. This pattern evolved on the MACD signal system. More on systems and which ones to use in coming segments, but for now I just want to introduce you to the power of these charting tools. Here's a quick instruction guide on how to implement the EFS scripts after uploading them to the proper files on your trading computer. You may wish to pause the video if you want to upload the scripts now, or you may return at another time. The eSignal website also has technical support information regarding the EFS scripts should you require additional assistance. The second and equally important component of this training on scanning the market involves assembling watch lists. Watch lists are key because they not only facilitate quicker trade turnover and efficiency, but over the years I have found that different equities perform better with certain directional and market neutral strategies. And since we're concerned with direction here, we want to target momentum stocks or any market that is trending strongly. Let's begin with the quality momentum scan I rely on consistently. I use the Investors Business Daily 8585 list almost exclusively to locate my high-quality momentum trades. This list is basically all of the stocks in the IBD database that have an earnings rank of 85 or greater and also a relative strength rank of 85 or greater. What this means is that these stocks, on a price momentum and earnings basis, are or have been outperforming 85% of all other stocks during the last 52-week period. So these are candidates with strong fundamentals and exceptional price momentum. I sort these by average daily volume and exclude stocks with less than 100,000 shares in average daily volume. According to the IBD, the 85-85 list has outperformed the S&P 500 index during the last 13 years by more than 10 to 1. So these stocks are the small and mid-cap movers you're looking for to trade momentum effectively. This is my go-to list for super high momentum stock candidates with very high relative strength rankings. More on this in a minute. StockTables.com also offers a competitive searchable database for momentum stocks as well. The next scan I do is also for momentum candidates, and it is my quality momentum scan number 2. Here I search the Investor's Business Daily or the StockTables.com database for stocks with a relative strength of 90 or greater, with a price of $15 per share or greater, and which also have an average daily volume of 250,000 shares at least. Additionally, I look for stocks which have doubled in the last 52 weeks to ensure that I only have the serious movers in this watch list. Many of these stocks will triple on their way past the doubling point. This list has produced many of my largest high-priced stock gains over the years. The next scan I perform is a speculative momentum scan. Here I narrow the scan only to those stocks with a 99 relative strength, so I'm looking for those equities which are making the sharpest, quickest gains. I'll restrict this list to stocks which are less than $15 per share, but still have decent daily volume. Again, using the doubler filter, only those which have doubled in the last 52-week period assures that I'm focused on the all-out movers. It has been this list which has consistently given me my largest percentage gainers over the years. Most of my trades which have doubled and occasionally tripled in price after I entered came from this very list. I'll also focus on stocks less than $2 for my penny stock entries as well. You'll find that the universal trigger produces outstanding entries in penny stocks. Once you have the momentum list compiled, you want to focus on maintaining a list of very liquid, index-type securities for setups which randomly produce extremely low-risk setup entries like the examples we saw earlier in this video. You'll be able to routinely find lower beta stocks with setup risk of just 1% or so. And in these stocks, 3 or 4% moves are not uncommon. So you can get very large positions on in liquid stocks with decent reward risk ratios of 3 to 1 according to standard risk gain management models. In order to assemble these watch lists, you'll want to compile first the Dow Jones Industrial Index of 30 stocks, followed by the NASDAQ 100 Index, which are the top 100 non-financial stocks in the NASDAQ Stock Exchange, as well as the S&P 100 Index. You'll want to eliminate the duplicates when you sort them, as many of the NASDAQ stocks are also in the S&P 100 Index. This is my go-to list for moving with the market timing model, whereas these are low beta stocks typically, meaning they will usually perform about as well as the broad market in terms of volatility. These candidates are great for short positions, but I'm certain to never miss my high momentum long entries. This has been an overview of how I compile my watch lists and the tricks I've learned over the years to maximize my effort, in addition to the eSignal EFS scripts, which are now a critical part of my daily trading procedure. Take some time to ensure your watch lists are updated and ready to go. You'll miss less opportunities and your trading game will be more effective. After you've done your segment review and you're ready to move on, I'll see you in the next video.